Imagine it, 1944, Bretton Woods, New Hampshire. Delegates from 44 allied nations gather in a grand hotel, ready to make a decision that will shape the global economy for decades. Britain, the world's financial superpower for more than 2 centuries, is broke. Its debt has soared to 249% of GDP after 2 devastating world wars. The empire that once ruled the seas is exhausted, and everyone in that room knows it. So they do something that has only happened a few times in history. They transfer the global reserve currency from the British pound to the American dollar. But this handover wasn't random. It was part of a pattern that has repeated itself for over 500 years. The predictable cycle of rise, peak, overextension, and collapse. To understand what might come next, we need to look back. In 1450, the Portuguese real became the world's first true reserve currency. Portugal dominated global trade for roughly 80 years, not by chance, but through revolutionary navigation and the discovery of new sea routes to Africa, Asia, and the Americas. After the fall of Constantinople in 1453 blocked the old spice routes, Portugal found a way around, literally opening a new age of discovery. Lisbon became the center of global commerce, and the real was accepted across continents, from Europe to Asia. At its peak, Portugal had military outposts in Africa, India, Malaysia, Japan, and even Macau in China. But success brought overreach. Maintaining posts across 4 continents drained the treasury, competition grew fierce, and a royal succession crisis destabilized the kingdom. By 1580, Spain absorbed Portugal, and the Portuguese real faded into history. Spain rose next, fueled by the richest silver deposits ever discovered in Potosí, Bolivia, in 1545. Spanish coins, the famous pieces of 8, became the first truly global currency, trusted from Europe to the Americas, even serving as legal tender in the United States until 1857. Spain's dominance lasted roughly 110 years, but debt and inflation took their toll. Philip II inherited mountains of debt and defaulted multiple times. Prices quadrupled, silver flows fluctuated, and by the mid-1600s, Spain's empire and currency influence were in decline. The Dutch didn't conquer the world with swords. They did it with ledgers. In the early 1600s, Amsterdam became the beating heart of global trade, where ships from Asia, Africa, and the Americas docked daily. The Dutch East India Company, founded in 1602, was the world's first multinational corporation and issued the first publicly traded shares. For the first time, ordinary people could invest in global trade without ever leaving home. The Amsterdam Stock Exchange became a model for modern capitalism, a marketplace of risk, profit, and speculation. But even this financial miracle had limits. Greed, speculation, and overconfidence began to grow beneath the surface. When the infamous tulip mania hit in the 1630s, fortunes were made and lost overnight. And though the Dutch remained powerful, the seeds of financial fragility had already been planted. Britain didn't just build an empire, it built the financial system that powered it. By the 18th century, London had become the new global capital of money, innovation, and control. The Bank of England, founded in 1694, became the backbone of a financial empire that stretched from India to the Caribbean. Gold was the lifeblood of this system, and the pound sterling became synonymous with global trust. Factories roared, ships multiplied, and the British pound was as good as gold, literally. The Industrial Revolution made Britain rich beyond measure, but also dangerously dependent on global trade and colonial extraction. When World War I erupted, the gold standard cracked under pressure, and by World War II, Britain was forced to borrow heavily from its new ally across the Atlantic, the United States. The empire that once ruled the seas had mortgaged its future. After centuries of financial handovers, the stage was set for a new superpower. In 1944, delegates at Bretton Woods made the US dollar the cornerstone of the new global system. The dollar was tied to gold, creating a stability that no other currency could match. For a generation, the dollar ruled unchallenged. But in 1971, everything changed. President Richard Nixon ended the dollar's convertibility into gold, effectively breaking the Bretton Woods Agreement. The world expected chaos, but the dollar survived. Then came the oil crisis of 1973. Gas shortages rocked the West and inflation soared. To restore control, the United States made a quiet but world-changing deal with Saudi Arabia. In exchange for American protection, Saudi oil would be priced and sold exclusively in US dollars. By 1975, every OPEC member followed, and the petrodollar system was born. From that moment on, every nation needed dollars, not because they wanted them, but because they needed oil. This artificial global demand allowed the United States to spend far beyond its means. It could print the world's money, fund massive deficits, and still remain the center of global finance. For decades, the dollar's dominance was unquestioned. It wasn't just currency anymore. It was power. But even the strongest empires eventually faced the same problem: overreach. By the 21st century, the warning signs were clear. America's share of global trade was shrinking. Its industrial base had moved overseas, while its financial system grew dangerously dependent on debt. At the turn of the millennium, the dollar accounted for over 70% of global reserves. By 2024, that number had fallen to 58%. Foreign investors who once rushed to buy U.S. Treasury bonds began to step back. During the 2008 financial crisis, foreign ownership of American debt stood above 50%. By early 2025, it was down to just 30%. Meanwhile, the U.S. government's own balance sheet has exploded. As of March 2025, total debt exceeded $36 trillion, 124% of GDP. The United States now carries the same level of debt that marked the downfall of Britain after the Second World War, and the rest of the world is no longer waiting. The BRICS nations, Brazil, Russia, India, China, and South Africa, have expanded to include Egypt, Ethiopia, Indonesia, Iran, and the UAE. Together, they're building financial systems that bypass the dollar entirely. Their new BRICS bridge payment network aims to settle trade using central bank digital currencies, cutting the dollar out of the loop. Oil deals once guaranteed to the petrodollar are now being rewritten in local currencies. China and Saudi Arabia are trading energy in yuan. Russia sells oil to India in rupees. Even smaller economies are experimenting with alternatives. De-dollarization is no longer a theory, it's a trend. History's rhythm is repeating. Portugal, Spain, the Netherlands, and Britain all reached this same stage: global dominance, soaring debt, military overreach, and then decline. The United States, despite its power, is following that same curve. For now, the dollar still stands tall, but every chart, every debt figure, and every trade statistic points toward the same direction. The cycle is turning once again. Every reserve currency in history has followed the same path: rise, peak, overextension, and collapse. The cycle has never failed. Portugal ruled for 80 years. Spain lasted just over a century. The Dutch held power for less than one. Britain reigned for more than 200 years. And now the United States stands 81 years into its run. The numbers, the patterns, and the behaviors all match what came before: declining trade share, rising debt, military overreach, a world quietly building systems to move beyond the dollar. But history never repeats itself perfectly. It rhymes. The next transition might not be sudden or violent. It could unfold slowly as the world shifts toward a new, multipolar system, one where no single currency dominates. China is rising, but so are digital currencies, regional trade blocs, and decentralized finance. The next global reserve might not belong to one nation, but to a network. Power is fragmenting, and the old order is fading. What replaces it, and how fast it happens, remains the biggest question of our time. Will the dollar decline gradually, like the British pound, or will it fall swiftly, like the Dutch guilder? The answer will define the next century, because in the end, money isn't just economics, it's power. And every empire, no matter how mighty, must one day pay its bill.